We lost £55,000 this month from our portfolio. 55 grand. But did we actually lose 55 grand?
So we want to talk about what to do when your portfolio crashes, not if, but when, because this is part of the cycle of stock markets. This is something to expect and to anticipate. So let's go into it.
Exactly. So did we actually lose that money? Part of this is inspired by one of the participants in our Rebel Finance School Facebook group. You can find the link in the notes below if you want to see it. But they said in the group, I shifted my pension pot of £87,000 to Vanguard FTSE Global All Cap in August of this year. And so far, I've lost almost £4,000 or 5.5%. I am just watching my pension pot disappear before my eyes, and I feel really nervous. Well, you would do if you said, I'm watching my pension pot disappear before my eyes. That would make me nervous as well.
Yeah, and we'll come on to the language to use around this stuff in a little bit.
So the thing here is, having done Rebel Finance course, you are now actually conscious of what you have in your ISAs, SIPs, and pensions, and we've told you to measure it each month.
Yeah, so before this was probably, well, it was happening to your portfolio. Your portfolio would have been going up, down, sideways, all that volatility that we talked about in Rebel Finance School. We've just actually made you look now and see it.
So it's our fault.
You had, a bit of a head in the sand idea of not looking at it ever. And now you're aware of it, and we taught you to look at it. So have we opened a Pandora's box, Alan?
I think we have opened a Pandora's box, because most people's strategy with their annual statements from their pension is just put it in a drawer, don't bother reading it. But now you're actually looking. So this Pandora's box has opened up so you can actually see the volatility. And one of the things Katie likes to say is that volatility is a feature, not a bug.
Yeah, of the stock market. This is what it does. People say, oh, I'm going to wait to invest until the market has calmed down and it's less volatile and less crazy. You'll be waiting forever. It doesn't happen. So we want to say, don't pick and choose from the strategy that we talked about. We taught you to look once a month, to be in this for decades, to expect market downturns and to treat them as stocks being on sale. We taught you to buy and hold forever. So stop looking, just look once a month and go about your life in the meantime.
Now, one of the participants from last year's course said you could just look at the number of units each month, because I think this is an important point. Whilst our portfolio had gone down, we had the same number of units, stocks and shares units, as we did before. So technically, unless we sell, we haven't lost anything.
Yeah, so some people say, well, I'm just going to track the number of units because that's something that I can control. I can be buying more with the gap between what I earn and what I spend. I can do that. And I've got mixed feelings about that, because you have to get used to this volatility if this is the game that you're going to play. But also, to have that morale boost, you can see that whether your units are going up, and that is what you can control. And the other thing I would really encourage you to focus on that you can control as well is your conscious spending, earning more, and creating that gap as big as possible between what you're earning and what you're spending, and then siphoning that money into building your wealth, whether that's first of all paying off debt and building your emergency fund, or whether you're on to being able to invest in low-cost index funds.
And what we're talking about now is a long-term strategy, and it is your attitude that will determine how well that strategy works for you. Because if every time the stock market crashes by 5%, you're panicking, you're saying things like, I'm watching my retirement plan disappear, you're going to stress yourself out, you're going to be full of fear. And when you're full of fear, that is when people do daft things like sell. They pull their money out of the stock market at a huge loss, and then they wait until it goes back up before buying again, because that's when it's stable. It's the worst thing you can possibly do. And one of the things we talk about on Rebel Finance School is the study that was done of who's the best investors. Was it the active investors that traded in and out of the market and bought and sold? Was it the people who forgot they had accounts? Or was it the dead people?
Who couldn't obviously do anything with their accounts?
The best investors are dead people. They invest, they leave it for the long term. Well, they can't do anything. They're not around. So just leave it alone. the challenge is people cannot help but meddle. They're trying to optimize, they're trying to move things about, they're trying to make progress above and beyond the market average. And you just need to cut that out.
And actually, this is one of the areas of your life, investing, where doing less is more beneficial. Just leave it and go about your life. In most other areas of life, if you want to get fit and healthy and strong, you've got to put more effort in doing more things. The absolute opposite is true of investing. So it's kind of counterintuitive, but that's something that we really want to instill in you, that this is something, just set it, forget it, set your direct debit going and go about and live your life.
So we are filming this video just before Black Friday. And if you don't know about Black Friday, it's a huge sale across the world and people put things on sale and the stores get inundated. Amazon sells out. People are crazy about Black Friday and they run into the stores. Stocks and shares are the only thing in the world where the opposite happens. The stocks and shares go on sale, the price comes down, and everyone sells theirs, runs out of the store screaming, probably runs around the streets, read newspapers articles about them, panicking that the world has ended. And it's crazy. When you see the price of a unit of Vanguard's global fund drop, it is on sale. Don't panic that you're losing money. Think, where can I find money to buy more? Have I got any coins down the back of the couch? Can I borrow some? Don't borrow money, that's not true. Can I money down the back of the couch? Have I got some cash around? Have I not invested? Can I buy more?
And I want to stress as well that this is for low cost index funds, broad based, meaning investing in thousands of different companies. This doesn't apply if you can see the price of a single company has gone down. No, we're talking about investing as much diversified as possible, meaning all different countries, all different industries. And that's what Vanguard funds do for you automatically.
Yeah.
And I want to say, we are not sponsored by Vanguard. We are not financial advisors. This is our opinion, and this is what we do.
And if you haven't been on Rebel Finance School, go on the Rebel Finance School course. It will explain all of this in much more detail. Now, let's go into our response. The person we introduced you on the Facebook message at the start, their thing had gone down 4K and they were really unhappy. What do you think the Donegan response to losing 55 grand in a month is? We have a lot bigger portfolio, so the swings are even larger. The more money you have, the more that volatility is in pound amounts. So what was our response, Katie?
Well, first of all, we don't think of it as losing money because we know that unless we sell, we haven't locked that in. So we just say, oh, the value of our portfolio has gone down. Okay, let me go about my day. If on the flip side, the value of our portfolio goes up when we check once a month, we go, okay, great, the value's gone up, and we go about our lives. And we just like to track because we like to have graphs.
Exactly. So our reaction in general is if we see it crash dramatically, it is, can we buy more? If we see it going up, if it goes down a little bit, it's like, well, it does. It's always going to go up and down, but over the long term, it does go up. So why does the stock market crash? In general, it's because investors around the world think long-term earnings are going to go down. So they're like not that confident that they're going to earn money in the future. So people sell it off and the price crashes. That tends to be what happens. Those moments are a good time to buy.
Yeah, and we want to say to you, have a plan of what to do when this happens. What language are you going to use? Are you going to say things like, my portfolio is disappearing, my retirement funds are going before my eyes, like I don't have any investments anymore? Or are you going to say, okay, this is to be expected, this is how the stock market works, I'm going to jot down what my net worth is as of this date, go about, live my life, and get on with things. I've said live your life a lot of times, haven't I?
Yes, you have, because we mean it. Stop looking at your stocks and shares. The purpose of this strategy is so that you can be out there doing what you want to do, not monitoring a chart. One thing is, the only time this really affects you is what's called sequence of returns risk. If the market crashes just before you're going to retire, then you need to pay attention. Other than that, forget about it. So here's the last closing 4 points of what plan to make. So plan number 1, how many times will you check the price of your stocks and shares? We do once a month. That's it. Number 2,
What language will you use when it happens? And we touched on that just now. Are you going to say, oh, panic, this is so terrible? Or are you going to say, oh, this is to be expected?
Number 3, what will your response be? So if it goes down, how will you respond? Looking to buy? If it goes down by 10%, will you look to buy 15%? Like, have an actual plan of how you will respond, and you'll feel a lot better. And then finally, number 4.
Who are you going to talk to about this? Who's on your team? Who's going to understand these things that you thinking and talking about? Because it's not normal to be checking your finances and moving on and doing good things, being proactive. So who will that be? Is that your spouse, your partner, your friends? Is it a Rebel Finance School buddy? Who is on your team? Who are you going to reach out to if you do have a little wobble?
And then the final piece, our net worth went down by £55,000, £55,099 this month. What did we do about it? Nothing. Did we lose money? No. We have the same number of units. We'll relax, and I'm sure it'll go back up over the long term. So stay calm and carry on investing. Thank you for listening to our message. And if the market crashes, maybe you want to save this video for the next time it happens so that you can watch it again each time.